Hi guys and welcome to the trading show. This week we are gonna talk about
markets, bond goes down, our portfolio rally on crude oil, tip of the week, bias on Ethereum, and the weekly rollovers.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Negative week for the stock indices, which, as you can see, show all negative returns. In particular, the one who pays the most is the Nasdaq, which over the last 5 days has lost more than 5%. However, as far as the mini S&P and the European indices are concerned, these are quite limited falls. What is more interesting is the trend of the bonds, which continue in their free fall. You can see in this chart the T-bond, which usually has an inverse correlation with respect to the equity, but in recent days has not been able to offset the losses deriving from the stock market. The same goes for the Treasury note, also in free fall, and for the German Bund. Instead, the positive trend of energy continues. In particular, we see in this chart the uptrend for gasoline, but it's also true for crude oil. The whole sector is in a positive trend, excluding natural gas. On the other hand, metals are negative, with the exclusion of copper. All cereals are positive, and we also report an increase of 7% among soft commodities for coffee. All the currencies are negative. However, it is interesting to note the trend of Bitcoin, which this week loses about 15%. We know that is an extremely volatile instrument. After breaking the psychological threshold of 50,000, it was unable to hold this price level and is now in retracement phase. On the historical volatility front, we report an increase in volatility in conjunction with the decline in the markets, especially on the Nasdaq, which is the underlying that has suffered the greatest losses. We see quite high percentile values in the short term. However, the level of volatility remains low if compared to the values of the last year. Also on the implied volatility front, we note an increase in volatility, but not particularly high. The only volatility index that is in backwardation is the VIX at 9 days, while all the other volatility indexes are in contango. The VIX in percentage terms has risen by about 28%, but compared to the values we have seen recently, it is still not at worrying levels. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week I want to show you two strategies. The first one is on the crude oil futures, and it is a strategy that enters just during the release of the crude oil inventories, which are released every Wednesday at 10:30 a.m. New York time, which is the exchange time of the crude oil future. And we can see that in the last week the strategy took two trades. The strategy is a specular strategy. We can see it here, a long trade, and also here a take profit, again with the long side. And going to see the equity curve analysis. Now it takes a little time. We can see, because it is developed on the 1 minute chart, we can see that the strategy has reached new equity peaks, and during the out of sample period, so the last 2 years, the strategy performed really well. We can see also here the annual period analysis were very good, and also that the number of trades of the strategy is quite low, because of course the starting sample is to make one trade per week, which means that this strategy can make at maximum 52 trades per year. And in this case the strategy filters some weeks, and so at the end of the year we have 30 trades. The average trade is also pretty good, also considering that we are including costs and commissions and slippage costs, and so we are really happy of how this particular strategy has behaved during the out of sample period, so the last 2 years. Okay, now let's move to the next strategy, which is on the S&P 500 future. The strategy is a trend following strategy, and we can see that yesterday took this profit target with the short side, and we can see also that the S&P 500 yesterday had a very high range during the day. We can see here that was over 100 points. And so we can say that this kind of strategies, like this one that enters when the market is collapsing, and so it may protect us, our portfolio, from stop losses from reversal strategies that enters long when the market is collapsing. And so this could be very useful to have a strategy like this in your portfolio. We can see it here, a strange thing, that the average trade is low, and on the long side is negative, while the short side, and here as we said, this is why we have developed this strategy, we can see that the average trade of the short side is $100. Also here we have added commissions and slippage costs. And so we can see clearly that in this kind of situation a strategy like this one may help a lot.
Hi everyone, and welcome from Andrea Unger. Today we will have a look again to the ETH/USD underlying. We are always using the data from Bitfinex, but today our focus will be on a bias approach. And in particular, we will try to see if it's possible or if it's profitable in general to trade this kind of market using an intraday bias approach. So what I've done, basically, I have optimized what would have happened on every hour of the day, and finally, I would have gotten this kind of report, where I'm able to see the various metrics buying and selling on every hour of the day. So this may be helpful to discover eventually if there is any bias on this market, because you may see if you would have gained or lost some money trading on some certain trading hours, on the long side at least. And then the opposite discourse is valid for the short side. So once I've gotten this optimization report in multi-charts, I have just copied this one by just using this button, and then I pasted the values into an Excel spreadsheet, and this just because the results were not so clear in my opinion in multi-charts, and I wanted to go more in the details analyzing the data on Excel. So what I've done here, I created a new column. There is the accumulated value of the net profit. So here basically I have just the cumulated sum of the net profit. And then I plotted on two different charts the net profit as an histogram, so as various columns, and then in a separated chart a line representing the cumulated values. The cumulated values, in my opinion, is useful just to discover eventually the effect of cumulated bars, so it may tell you more in the details if you would buy in a certain bar, what would happen if you keep the position for a certain number of bars. So this may be extremely useful, and you just have to sum the previous value with the new value, and then you get a final cumulated value to plot. So this is also an extremely simple way to calculate everything. But let's go as first to the single hours values. In this case here we can see that, in my opinion, from 1 AM up to 10 AM there isn't a precise trend on this market. So it would be pretty hard in this phase of the day to find a certain bias, because we don't have so many consecutive bars in a certain direction. So it would be hard to create a short strategy only with those two bars. It would be hard to find a good long strategy just keeping the position for those 4 bars, and the same discourse is valid, of course, for those 2 bars. But from 11 AM up to the midnight of the next session, in my opinion, it's extremely powerful, the long side. But unfortunately, in this second part of the day, it's not possible to trade short, so we cannot find a good side too, if I can say so. And this may be seen also from the cumulated chart I have created. As you can see here, it seems the market opens with a sort of gap if compared to the previous bar on the midnight, and then it goes sideways until 10 AM, sorry, and then after 10 AM it seems to rise with a certain consistency until the end of the day. So it would be pretty hard to find a short strategy here, but also a long strategy here, and again it would be extremely hard to find a good short strategy only in those 2 bars, and we would find only a good long strategy from 10 AM up to the midnight of the next day. So in these cases I recommend not to trade this kind of approach, because it would be mandatory to just keep a long position for 14 hours a day. So I would try, to be honest, some other approaches instead of doing the bias approach on this underlying, just because there isn't a good short on the opposite, so it would be extremely hard to balance everything, and you would just keep a long open position for 14 hours of the day without the short position that would compensate in part.
Let's take a look at the rollovers for the next week. We have European bond futures expiring, mainly the German Bund and the Italian BTP, on 6 March. I remind you that, although the maturity is later in time, we have already rolled over the American bond futures, Treasury note and Treasury bond, due to the higher liquidity that is already present on the June contract. I hope you enjoyed this video, and if you want to learn more about the trading method we at the Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called the Unger Method, the winning strategy of the 4-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger method now. You pay only shipping and handling.